Well, as a newcomer, it's useful to be very outspoken at the beginning, not after half a year, because then you become part of the establishment. And I also thought that negative interest rates is not a very good idea economically and socially. So I decided to be outspoken and to change the atmosphere and the tone in which the discussion has taken place so far.
You have talked about the need perhaps to look again at the inflation targeting. 1.5% I think was your suggestion. Is there an argument for being even more aggressive and cutting that to 1%, or perhaps shifting the whole nature of strategy away from this notional idea of the magic inflation target?
As you know, there is a strategic review envisaged for the ECB starting in autumn, on which all options are on the table. My personal view is that we're around 1.5% inflation rate nowadays, and it has been pretty stable over the last couple of years. So my sense is why to move to something which is slightly higher, but would require a major effort to reach it. In this case, it's natural, as things change, to change your objectives and don't try to get for that which costs you a lot of effort and has a lot of negative side effects.
This IMF meeting has produced a very downbeat forecast on growth expectations, not just for parts of Europe, but also for other parts of the world as well. It is an outlook that has produced a request for more fiscal expansion from countries like Germany that are perceived to have that headroom at the moment. The other side of the coin argues, though, to throw good money after bad at this point may not be the wisest option for the global economy or for the Europeans. What's your view?
I think both are right. I think it's important to supplement a quite likely not effective monetary policy with an effective one, which is fiscal. But if and as you undertake fiscal expenditures, it should not be expenditures in the area of transfers, because here we have already quite a lot of outstanding liabilities which threaten the stability of the currency system. It needs to be invested into expenditures which increase output, expenditures which create growth, and hence expenditures which have a Schumpeterian notion, which means something which allows to create enterprises, new ventures, and thus helps to create growth.
Are you frustrated as someone who knows the IMF and knows the pension world and ultimately now is in this important role at the ECB and at the Austrian Central Bank? Are you frustrated that we've had 10 years since the financial crisis where we've not seen huge progress on European integration? We've also not seen a great deal of progress on the kind of structural reform that some parts of Europe desperately need and which the ECB specifically gave cover for.
Definitely, this is the area where a lot of action is needed. And if and as projects of reform become credible, they become also effective immediately. It's like with monetary policy, but it has to be credible. And from the list of credible reforms, definitely nowadays you have climate change at the forefront, but very soon you will have also the question of how to make a pension systems in Europe sustainable with an ever-aging population.
Your voice will be added to others, I think, at the ECB now that are starting to raise questions about the strategy that has been pursued in the past. Christine Lagarde comes in. What are your hopes in terms of how she changes both the policy direction and the way in which the ECB communicates with the markets?
My hopes are very high. She's a very intelligent, determined woman. She has shown her capacity of forming compromises. She has been able to lead the IMF under difficult circumstances. So I'm very optimistic that she will hear the dissenting voices, will take them serious and try to find new ways of addressing them.